Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 4, 2025, and we're diving into MPLX's third quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. MPLX has reported some significant numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. MPLX reported a net income of $1.5 billion for the third quarter of 2025, a substantial increase from $1.37 billion in the same quarter last year. John, what are the key drivers behind this growth?
The growth in net income is primarily driven by MPLX's strategic execution in optimizing their portfolio and increasing operational efficiencies. Their adjusted EBITDA also saw an increase to $1.8 billion, reflecting strong performance across their segments. Additionally, MPLX increased their quarterly distribution by 12.5%, which is a testament to their robust cash flow generation and commitment to returning capital to shareholders.
Segment performance and strategic initiatives. John, can you elaborate on the performance of MPLX's segments and their strategic initiatives this quarter?
Absolutely. The crude oil and products logistics segment reported an adjusted EBITDA of $1.137 billion, up from $1.94 billion last year, driven by higher rates. The natural gas and NGL services segment also saw an increase to $629 million. Strategically, MPLX is enhancing its portfolio by acquiring a sour gas treating business in the Delaware Basin and divesting its Rockies gathering and processing assets. These moves are aimed at strengthening their core operations and focusing on high-growth areas.
Financial position and liquidity. Let's talk about MPLX's financial position. They have $1.8 billion in cash and a leverage ratio of 3.7x. How does this position them for future growth?
MPLX is in a strong financial position with significant liquidity, including $2 billion available on their credit facility. They issued $4.5 billion in senior notes, which provides them with the flexibility to fund strategic initiatives and manage debt. Their leverage ratio of 3.7x is within a comfortable range, supporting their growth and capital return strategies.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.07 for MPLX, but the company reported an actual EPS of $1.52. What does this mean for investors, John?
This is a significant beat on the EPS forecast, which was based on estimates from 5 analysts. The actual EPS of $1.52 indicates that MPLX is outperforming expectations, likely due to their strategic initiatives and operational efficiencies. This should instill confidence in investors about the company's ability to deliver strong financial results.
Operational efficiencies and future outlook. Looking ahead, what are MPLX's plans for sustaining growth and operational efficiency?
MPLX is focusing on expanding its infrastructure, particularly in the Permian Basin, with projects like the Eiger Express pipeline. They're also increasing processing capacity and investing $2.4 billion in the Delaware Basin. The company is targeting mid-single-digit EBITDA growth, which is supported by these strategic investments and their commitment to optimizing their asset portfolio.
Key takeaways. In summary, MPLX has delivered a strong performance this quarter with a net income of $1.5 billion and an adjusted EBITDA of $1.8 billion. They beat the EPS forecast with an actual EPS of 52 and increased their distribution by 12.5%. Thank you for joining us, John.
Thank you for having me. MPLX's strategic initiatives and financial strength make it a compelling investment opportunity.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on MPLX's performance in the comments below.